If you're buying a home in Alberta and someone is helping you with a down payment, that can absolutely help you buy sooner. But a gifted down payment only helps you if the lender can actually use it. Lenders are not just looking at whether the money showed up, they want to know who gave it to you. Is it really a gift? Does it need to be paid back? And does the paper trail actually make sense? So in this video, I'm going to walk you through exactly how to use a gifted down payment for your mortgage. I'll be going over what lenders are trying to confirm, what raises red flags, and what you need to do before you apply so the gift actually helps your file instead of slowing it down. My name is Ushindi Mutabazi, also known as the Self-Employed Mortgage Guy. I specialize in helping self-employed Albertans qualify for a mortgage without waiting for the 2-year income averages, paying more in taxes, or changing the way that they run their business. Now, when most people hear gifted down payment, they think it's fairly simple. Mom or dad sends the money lands in their account, we're done. But the lender is not just asking, did you receive the money? They're asking, can I use this money as part of the down payment on this mortgage? A gifted down payment can be completely fine, but if it is handled sloppily, transferred the wrong way, documented late, or even if it's being treated as a gift when really it's a loan, that is when the file starts picking up questions, and the more questions your file creates, the harder it becomes for the underwriter to actually approve your mortgage. So the question is not, can someone give me money? The question is, can I prove this gift in a way that makes the lender comfortable? At its most basic level, a gifted down payment means someone is giving you the money to help buy your home, and that money does not have to be paid back. I am going to repeat that last part one more time because it's usually very overlooked, but is very important, and the money does not have to be paid back. If a lender starts thinking that this money might be repayable, it stops looking like support to buy the home and starts feeling more like a hidden debt. This is why the gift has to be clearly documented as non-repayable. Now that you have a better understanding of what a gifted down payment is, the next big question is who can actually gift you this money? By far the cleanest and most common source is a relative. Relatives are what lenders are used to seeing, and they usually create the least confusion. But not every lender or program is going to treat every gift source the same way. So if the money is coming from outside the usual family path, I would definitely suggest you double check early before any money starts moving around. When double checking with the lender, they will want to know who gave you the money. Is it really a gift? Is it non-repayable? Can the paper trail prove that? And does any part of this create a new problem somewhere else in the file? To get those answers, they're going to ask for a few documents, the first being the gift letter. Before we keep going, if you're self-employed and planning to buy in Alberta within the next 6 to 12 months, click the first link in the description and complete my 3-minute mortgage readiness quiz. One of the biggest reasons people never end up buying is because they never feel ready, and most of the time they have no idea how close they actually are. So I want to help you out and provide some clarity. Once you complete that quiz, I will personally record you a custom video within 24 hours breaking down your numbers, explaining exactly how a lender would likely view your file, and laying out a clear approval strategy based on your current situation and your goals. This quiz is not a mortgage application. I will not be pulling your credit. This is just a chance to get some answers and get one step closer to buying your home. Let's get back to the video. The gift letter is what confirms who gave you the money, their relationship to you, the amount of the gift, and that it is non-repayable. The second document is the bank statements. The lender wants to know where the money was before, where it went, and where it is now. The cleaner the movement is, the easier the review becomes, and that is why I would strongly avoid making the gift more complicated than it needs to be. Do not bounce it between 3 or 4 different accounts if you do not have to. Do not wait until the last possible minute to document it, and do not assume because the money is now sitting in your account that the lender will not ask where it came from. Knowing all that, mistakes still happen, but I would suggest that you learn from others' mistakes, not your own. And by far the most common mistake is treating the gift like casual money. Do not use the money for anything except what it's for. Once it becomes part of the mortgage file, it's part of the file and it has to be documented properly. The second mistake, and I'm hoping it's not one that you end up making, is not doing anything I've mentioned in this video until it's too late. If you wait until the lender is already reviewing your file to figure out the letter, the source, the money trail, you are making your file and your life harder than it needs to be. The third mistake is having the money show up in your account with no clear explanation. A large deposit with no context is quite literally one of the fastest ways to trigger unnecessary questions. And the final mistake mistake that I would suggest you watch out for is thinking the gift solves everything. A gifted down payment does what it's supposed to do. It helps you with the down payment, but it does not automatically fix credit, high debt, unstable income, or an overall file that does not qualify. The gift can absolutely help you buy sooner. For a lot of buyers, especially first-time buyers, it's one of the main reasons they're even able to get into the market in the first place. And there is nothing wrong with that. If somebody can help you out, especially a relative, get the help, but the gift should be making your file simpler, not more confusing. So when you get the gift, you want to be thinking, how do I make this as easy as possible for the lender to understand? How do I make sure that the story makes sense right away? And how do I answer the questions before they even come up? Make sure to keep in mind that the stronger your paper trail is, the less friction it creates, and the less friction you create, the smoother the process and the less headache that you have to deal with. If you're planning to buy a home in the next 6 to 12 months and part of your down payment is going to be gifted, make sure you click the first link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally record you a custom video within 24 hours breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your goals and your current situation. Also, make sure to follow me on Instagram at Self-Employed Mortgage Guy for more self-employed mortgage advice, or if you have any questions, maybe it's about your down payment or anything else, a link for that will be in the description as well.